So war is happening, and if you've been looking at the markets recently, you're gonna seeing a lot of red, red, red. So let's do a very quick, brief history lessons on the war or what happens to wars versus capital markets. If we go back as far as World War One, you see how the wars actually affect. Now, I'm using this comparison vis-a-vis S&P 500 because wars are global. They don't just affect one single market. So I'm going to use the S&P 500 as the benchmark. So if you look at what happened during World War One, New York Stock Exchange was closed for 4 months. What happened is after the exchange opened, after 4 months later, the index dropped actually 40%. Now, within 12 months, what was interesting was while the war was still ongoing, markets recovered to the same level they were before the war broke out. Now, fast forward, this was still when war was still happening. 24 months after that period, the stock market was double where it was even before the war started. We fast forward a little bit. We have to remember back then, World War One, dissemination of information was a lot more basic. Not everyone had information as quickly as we do now at the key of our fingertips. If we look at as recent as the war in Iraq in 2003, you notice that initial market drops, you're probably looking at about 15%. But actually within 3 months, 3 to 6 months, markets fully recovered. Now we fast forward again to our latest war conflict that happened in 2022 where Russia invaded Ukraine, right? You realize actually within 3 to 4 months, the market rebounded back to where it was. So you're going to see an initial pullback. What we've seen in all war cases is that we're going to see an initial pullback and then markets continue. So what does this really tell us? It tells us that if you're going to use history as a guide, is that typically when war breaks out and it takes time for investors to kind of digest the information after the initial knee-jerk reaction, what we've seen time and again, is that markets actually eventually recover to their base point. And almost all the time, it ends up even higher. So you can kind of conclude that war outbreaks are short-term in nature. To prices. What matters more actually are the fundamentals of businesses, whether they're making profit. So things like inflation numbers, monetary policy, all that actually plays an even bigger role on prices rather than war outbreak.